Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Thanksgiving week, so we've got a shortened trading week. And, today here in the Treasuries is looking like it's going to be pretty quiet, but we often get some wild things happen before and or after the Thanksgiving break. So, plus we're in like one of the most interesting markets I think we've ever seen. So, I think you strap in. First thing I want to note here, I do have that volatility indicator on S&P 500 now. And for some reason, they're expecting more volatility today than they were on Friday. So, like, that's kind of interesting. It's not like dramatically more than other recent times, but it is coming back up. So where is okay, so you can see here the Treasuries. You know, in the news squawk there was lots of headlines in the euro and Japan. Japan is on holiday, by the way, today. So but lots of things going on that could potentially affect Treasuries, but probably not. It's just, I think it's probably going to be pretty quiet today. S&P 500, you can see trying to recover from some of that downside. You know, I think that there's this thing like AI needed a haircut. Was that enough? I don't know. I think that some people might be a little dismayed that market doesn't come back nearly enough, but we'll see. Oil's still down here. Gold and silver looks like they've built a good base there. Kappa kind of doing similar. So here's the Japanese yen. Okay, so down a little bit, but nothing too much. They are talking about like intervention and stuff over there. So, and then the Bitcoin. Okay, well, they're back a little bit, but Bitcoin still looks pretty scary over there. Pretty scary. So, good morning, Paul, Ray, haven't seen you in a bit, and Uzi. So, well, got anything else here? You're gonna go around, start reading headlines and so forth. Zero Hedge top story now is college educated oversupply crisis worsens. You know, I'm really tired of this kind of like situation where everybody's like, oh, it's AI. No, it's not AI. And can you prove it or not prove it? And it just continues to go on and on and on. To investing titans issue the same warning. Both agree that physical gold ownership is important. Novo Nordisk plunges after Ozempic pill fails Alzheimer's trials. Wow. Worst year ever. Well, yeah, but they were up so much. Like, come on. Like the amount that those companies were up past few years is really insane. On my end, the volatility indicator was pulling an incorrect number. Well, let's see here. I got 502. You say it's 518. That is interesting. Let's come in here and check. CN, December, options quotes. Oh. Options for this contract may have expired. Why would that be? Oh, is it because my probably 1, 2, 3, because we do trade on the Friday, right? They expire every month. No, I was just using the contract that we're on, right? So right now it's looking at December, and it's saying that December options expired. Maybe they expire sooner than the futures do. If I come to December, then it is 5.18, as you say. So I can change that logic, I guess. Yeah, these are March. But what are you saying? Are you saying that there's a January? I don't see a January over here. Back. Nope. Yeah, there we go. Yeah, it only shows me December and March. The 1226. Where are you getting the 1226 from? ZNH26. Oh, that's March. Oh, 1226 is no. Where? I'm confused. Options expiry is Jan. Yeah, but it's ZNH26. Well, or let me put it this way. If you look in the URL, what is the instrument here? ZNH26. Right. And the issue is that under the current logic, it is looking for Z and Z25. So that's the difference. Although, how does it still pick up a number? That's interesting. So I had to build in the conversion logic to be able to look up the correct code ZNH26, but it doesn't have rollover logic. It just it relies on the base data series for the month still. So it's not using ZNH26 because my December contracts still set up to roll over, probably tomorrow. But perhaps the rollover for the options changes, or maybe it's just bar chart. Maybe mine is correct. Actually, that's interesting to think about. ZNZ 25. It does pull it up. But how come when I did this over here, when I click 10-year options quotes, I'm a little weirded out by that. That one works, but this one doesn't. Futures quotes is in Z25. Oh, but this says Jan 26. I see. Oh, wait. Hold on. So, is that in... I did not notice that in the URL before. The options expiry is January, but they're for March futures. That's interesting. I did not know that. But where's the URL come from? Oh. Oh, that's even more interesting. It does this. Dash options dash or question futures options view equals merged. Can I put on something quieter? Is it too loud today? Turn it down a little bit. I don't know how you can even hear the music, right? He might just be trolling us. So, but then the question is, when do the futures, or sorry, when do the options, the monthly options, roll? Because is it like the normal rule is 3 days before 3 business days before the end of the month, right? So are the options 4 business days before the end of the month? But yes, this is exactly why you can go in and modify it by hand. I end up hearing mostly voice only. I just turned it up and it doesn't seem to be overly too loud. I do wonder sometimes if the audio isn't good enough, but I know that I should be a lot louder than the music, that's for sure. Maybe ChatGPT can answer this for us. Options on the CME Group Treasury futures do not always roll or expire at exactly the same time as the underlying futures contracts. There are important differences and nuances that you should be aware of. Treasury futures trade on the March, June, September, December quarterly cycle. The roll for futures, meaning the migration of open interest from the front month to the deferred contract, typically occurs in the last 10 business days before the contract month begins. Expiration last trading day for futures is defined in the contract spec. What about options? The options on Treasury futures are governed under specific rules. For example, according to Rule 18A01.A of Chapter 18A Options, quarterly, serial, weekly, on its last day of trading shall cease trading at the same time as the close of trading on that day in such an options underlying futures contract. Additionally, weekly options on Treasury futures have their own rules. For example, on the last day of trading, an expiring Monday weekly option shall cease trading at the same time at which the exchange determines the settlement price for that day for such options underlying futures contract. The CME FAQ on Treasury weekly option states for Monday, Tuesday, Wednesday, Thursday weeklies. Trading stops at 2 p.m. CT on the day of expiration. Or weekly, but I guess we're interested in monthly. See if it'll figure this out. Oh. Trading terminates on the Friday before the second to last business day of the month, prior to the contract month. Why do they have to make everything so pickin' darn difficult sometimes? So that means 1, 2, and then the Friday before that is the 21st. So last Friday was the last day for those options. Huh. Interesting. That because the thing is that will require some complicated that'll require some complicated logic there, because you will have to manually determine when the future is going to roll and separately when the option is going to roll, because you have to be able to take care of situations like at the end of January. So let's see, we can go to January. Well, let's say the end of December. 2 days before the end of the month, Friday. Okay. So that will roll over at the 26th. But at that point, we won't be rolling. The contract will already be on March. So it will be March futures contract, but the options for January instead of, or will it be February instead of January? Or is it January instead of December? Anyways, I have to sort that out, right? But then the logic for the S&P 500 is probably going to be a little bit different, isn't it? Yeah. But we can sort it out. I'm interested, though, that even though I go and I visit that URL and it's fine, doesn't look to me. Well, let's see here. Let me just double check. Where's my output window? Yeah, no output. So it didn't have, even though I'm having a hard time finding it at the moment, it didn't have a hard time finding it. So that's kind of weird. Wonder where it's getting it from. What are we doing here? What is this? Oh, that's right. I was trying exorcism. Where are we going? Oh yeah, Ninja Trader. Saved. CN volatile. Oh, it's still doing something weird. So it pulled out 502 and it put it in there twice. And where is it getting 502 from? And do I have this set perhaps to not? No, I have it set to debug. So that gets even more weird. You haven't had the double pull issue. Maybe, no, that doesn't make sense. Does it? I'm searching around to see if perhaps I have a second instance of the indicator out somewhere. Because I definitely put in here writing data. Okay. Where did it go? This over here. These two delete, right? Refresh. Writing data to. Oh. Hey. I can debug that. Could not find implied volatility. Could not find implied volatility. And then it wrote it anyways. What's your opinion about the orb strategy? It doesn't work. See, a lot of people have like temporary success with it, but it doesn't work. I've back tested it. It didn't work in the back test. Wait, what? Loaded file. No cache data found for today. Couldn't find the implied volatility. It writes it. And then it says it once again could not find implied volatility. Do you ask why, sir? Oh, because I backtested it. Anyone doing orbit that has success is doing all sorts of other things to make it work, and those things are the strategy? Maybe. How would we prove anything at that point, right? There might be some additional discretionary factors that they include that we're not aware of, and then, you know, whatever. If we knew what those were, we could program something that utilizes machine learning to sort those factors out, and then maybe you could prove that it works. But the first thing that I would need to see would be a record of somebody that's been trading that for 5 years. Because I see plenty of people that have been doing it for a month, or have been doing it for a year, but I've never seen anybody with a long-term record have success with it. So that's very interesting. It writes it twice. It writes it twice, even though my debug message only shows up once. So there's somewhere else that it writes. It's impossible! Taking a pure breakout from it does not work from what I can see, even by Hypo. Well, the place where I've seen a lot of weird things about it is that, like, if you're doing like the first 30 minutes or the first hour, you know, a lot of the time it's already moved like way too much, you know, and you know, you get this thing where, how would I draw it? You know, the first hour is this, right? And so then you say that's the opening range. And then the rest of the day is like this, right? And then you're constantly getting in and out as it goes back and forth across that line. Right. For this to really work out, it would have to be something like the first 30 minutes are like this. And then eventually it breaks out to one side. Right. And definitely, hopefully, you don't get something like this. Right. So on the Facebook futures group, the largest Facebook group for futures, there's this marketing guy. It's really deceptive. Like, basically, the Facebook group is owned by a marketing guy, and he basically has it set up so that he can do marketing and nobody else can. And he markets opening range really, really hard, even though he's not making money from it. You combine it with... Well, but why? So let's back up a second. Why do we think that opening range would even work in the first place? This is the thing that I really think is missing in a lot of retail trading strategies. Is we have some idea, like, does opening range work? Or they think, does smart money concepts work? Or these price action or whatever these setups are. And then they say, well, I don't think that this particular setup works. But what if I combined it with order flow? Then does it work? But you're never kind of addressing the deeper question, which is, why would we expect opening range to work in the first place? Like the whole concept is kind of dumb to me. It's like that's gonna establish a range in the first hour, and then whichever side of that range it breaks out of first, it's gonna trend in that direction. That doesn't make any sense. Like, it's appealing to our brains because our brains, those are the sorts of things that our brains, heuristics that our brains try to use to predict things. But what is, like, actual logic that we have that's going to tell us it's going to do that? What is actual data that we have that's going to tell us it's going to do that? I need to just put this up here and leave it there. And Aha. Aha. Yes. Okay. Clear all that. Yeah. Oh, sorry. I did have it on there twice somewhere. Can I find pen value, writing, and it's writing the default value. But okay, so now everything is in order, right? It is telling me, oh, I couldn't find it. I'm just going to use the default value. We found out why it's happening. And it would explain why the way I was getting that issue and Uzi was not. It's because I put it on twice. Now, if you want to have it on multiple times, you just have to be sure that only one of them is writing, I guess. I don't know how I deal with that. That requires a little bit too much intelligence from the user for me to be comfortable with. Because here you can see even myself being the one that created it and should be the smartest user made the mistake. All right, so what were we doing before that came up? Oh yeah, well we were just kind of sorting out what we'd. So I have to tell it, really, instead of using this options, futures option view merged, I should be only looking at the front month contract. But why does this one, is it January? Well, we're in December options, then I should be looking at the January expiration. Let's see here. So I come here and then I say March options quotes. Type monthly options March. Oh, this is the merged one, but I think we actually want this one, which is the same. Okay, so where's ChatGPT? We gotta ask her another question. Does the rules for when the monthly options roll change between instruments like ZN and ES? Yeah, they do. Of course, on the third Friday schedule. In 1 week, how many times did you get set up for trades? Well, I don't know. I don't think we took too many last week, but yeah, I think that you can get 3 good setups a week, depending on the market and the time of year and stuff. Okay, so I always use the nearest one. So I could say if so it's trying to do ZNZ 25, and if that doesn't work, then I could tell it to just do ZNH 26. Look at the next one. We could try that. Where's my... Closed it. I don't think that this is going to be perfect, but it might work most of the time. Having a hard time focusing here. I have to change some of the structure of my code, my methods a little bit. Why is the whole thing calling people sir online, is that an Indian thing? Because like that's not the first time I've been called, you know, talked like that, and I'm like, is it the same person, or is that like all Indians talk like that? Or in this particular situation they would talk like that. Say treasury market's still pretty quiet today too. I'm just gonna copy this. It's the only way that makes sense to me. So I think that I will just come in here and say, when I have an exception, throw it so that this one will catch it. Oh, I see. I got it. We do this. I know you can't see what I'm talking about, but just pretend that you do. It's a great way to address anybody. Ah, okay. I feel like it's weird, but okay. So the issue with this logic is it's not going to work on every, it's only going to work on quarterly instruments, which is the two that we care about. But, yeah, we're going to have to, you know, deal with that sort of stuff. All right, where's our output window? Reload. Let's see what that does. Okay. I've been writing in Rust for too long. This is like the error logic in this would be cleaner in Rust, and I sort of forgotten how to do it effectively. And then, oh, that's not what we wanted. Actually, that was concerning. But okay. Hey, it worked. Wait, what? Oh, good morning, Big Toasty. I'm so confused. I thought I fixed that. I think maybe before when it was doing this. Well, no, that just doesn't make sense. So it like sometimes it is right, like it wrote the 5.02 there somewhere, right? How did that happen? Without it saying. This is so funny. The append a value and the right aren't being called twice. So how come it's writing twice? Unless the indicator is on there somewhere else. Rocks. Good morning. We're just doing a little bit debugging. Well, I can be sure that it was on a ZN chart. If there was another one out there. And there's only that one over there, and there's these 3 over here. Everybody's had a big spike in giving some of it. I mean, nothing too big though. The first, like, what, 15 minutes? It's got to be that it's there. Maybe if I close the workspace. Cool. So now I'm going to close the main workspace. Oh, man. Okay, that does suggest that there's still an opening range indicator floating around out there that shouldn't be there. Wow, was the implied volatility on the 20th really 7? Okay. Our little hack worked though. It did find the right one until we roll over. So I think that's okay. So there's a chart that I'm missing. It's hiding on here somewhere. We gotta find. That over here. I only have 4 Ninja Trader things over here. Got on 1 minute and 5 seconds, huh? Oh, is it because of the variance range? Oh, yes, that's what it is. Okay. Oh, I wonder if there's a way. I know that there's a way for me to look at all other indicators on the chart, but I'm wondering if there is a way for me to access all indicators on all charts anywhere within the workspace to see if there's another indicator for that instrument that has writing and make sure that there's only one. Oh man, I'm about to go down a crazy rabbit hole. I don't think I should do this, but I'm so curious now. I'm so curious now. Just trade? Well, I think that we're not going to get any good trades today in the treasuries. Japan is closed. So I don't really think that there's much of a point in trying to force something. Oh, okay, yeah, sorry. Okay, so we have an indicator that scrapes bar charts to find out what the implied volatility is for the day. And I created a second version of it that attempts to create dynamic lines. So instead of just having like line for the day and those are the straight lines, if something happens, like there's a big piece of news at the beginning of the day, the lines will kind of adjust and say, okay, well, we know that there was that big thing, but now from here, the volatility should continue to be within this line. And so it'll just kind of move the lines up. And I copied all of that same logic into that second indicator. So what's happening is when I refresh the ZN chart, both of those indicators are running their logic and writing out the implied volatility into the cached file. So basically, you have to go into one of them and turn that writing part off, which I don't even have a variable in there to turn off the writing of the cache data. Okay, but then we'll add that, but then we also need to say, like, you can literally only have one indicator that's writing the volatility data. So how can you ensure that? Can I actually search through every indicator in the workspace? I'm not sure if the workspace is something that we are given access to. How do you host your website? I use nearly free speech. And for payment, I'm using PayPal. So if I come in here, I think you can go chart dot indicators. This dot chart control, perhaps, dot indicators, right? And that's what gives me access to all of the other indicators that have been added onto this chart and allows me to do some things that I don't think that they ever intended. Are you asking because you're going to do a website as well? Oh, well, I used a template. So like I went and I found like just a pure HTML5 template. For my algo, I can pull the VIX from Kinetic. It's end of day only, but easy to code a second data series and pull it into an indicator. Oh, does Kinetic offer end of day data for free? I forgot about that. But this is a little bit different. So like using the VIX is a way to do it for sure. But we are calculating it essentially from the at the money options, like the nearest expiration at the money options. And we're just finding for some reason that the market seems to hold to those levels a lot more fiercely than the levels that we get from the VIX. Although that might just be because I have never been able to do it on Move Index here in NinjaTrader, so maybe you get the Move Index, it'd be similar. Okay, so instead of doing this dot chart control, could we say this dot workspace? Sounds like a job for ChatGPT. Okay. In NinjaTrader, Ninja script, is there an object that gives you access to information about the workspace? So having the indicator scrape all of the information and everything, like, really, I think makes the most sense and is the easiest for people. But if you're going to have this issue where multiple versions of it are going to try writing to the same file, and that's an issue, that's a big enough issue, maybe I have to say, like, you have to run this add-on or something like that. See, in my own platform, I think that there would be like a data management section. And things like scraping this data and putting it in there all the time would be part of the data management section. And then if you had an indicator that wanted to use it, you would have to have that thing set up in the data management. And then that would solve the problem. So could I like make a data management plugin for NinjaTrader to deal with this? I could, but I think that would just make it harder for NinjaTrader users to use. So I think it's better have it be written twice and have them deal with it, you know? Because I think over here, if I refresh this, yeah, it still loads up. So it writes it twice, but then I have it good enough that it just ignores that issue. The variance range is probably crashing, but mine isn't. It says that there is a global, but it's not. There's not. It seems to think that you can do this. Oh my god, if this works, I'm gonna be like, this is gonna blow my mind, man. Oh, it even says it goes into tabs. Wow, it's actually the code is getting here. It looks pretty good so far. Let's try it. These are all in it. Okay, well, anyways. What did it call it? Try scan. Try scan. This is gonna be wild if this works, man. This even compiles. Well, that's not going to work. It's trying to use $sign. It's trying to use newer C# syntax that's not available to me at the moment. Print indicator name. You know what? We don't need that part. Let's just ignore that part for now. It's using all sorts of fancy new C# 14 or whatever version we're at features. Chart does not contain a definition for chart control. Well. Maybe I should just have it for now. Just say use reflection to print out what its actual type is. And my trades, I rely on auction process. Okay, auction theory is wrong. You know what? I'm not being very nice today. I need to. So let's go back, and then you order for confirmation, but the result in the end say 0, no profits, no big losses. Is there something I can? Okay, so let's talk about auction market theory for funsies. Auction market theory says that you have let's come and use a volume profile, right? Auction market theory says that where we've had a lot of volume, this area is considered an area of agreement between the buyers and sellers. And it will continue to trade in that place unless something happens to change the agreed upon value of the asset. At which point there will be something which they call range extension, which will be, it will now break out of this thing and it will move up and it will continue to auction like an auction process until we get to the point at which nobody is willing to pay more for that asset anymore. And then it will, that will be like the new value and it will readjust there. Okay. The problem with auction market theory is that this place right here, is a coincidence. Doesn't reflect value. Like, really? Think about that. Do you come in here and try and take a trade because you think that that instrument is fairly valued? That's stupid. Nobody trades like that. You trade it because you want to buy it because you think that it's undervalued, or you want to sell it because you think it's overvalued. So the idea that a lot of volume happening at that place somehow means fair value is kind of ridiculous, really, when you think about it, right? So what causes those? Well, what we find in the empirical research and peer-reviewed literature is that price tends to settle where supply and demand are at their minimum. So it's the opposite. That actually makes a little bit more sense, right? Supply and demand just aren't there. And what happens? It just kind of settles into the spot and stays there. Okay, so then why does there end up being so much volume there in the end? Because it's been there for so long, right? Like if it stays there for 4 hours, then there's going to be a lot of volume there. Or it's the closing auction. The 90% of the time, that point of control area in the S&P 500 is where the closing auction was. Okay. So what'll happen is a lot will kind of trade quickly and reduce the latent supply and demand in that area and create like a hole where price just kind of gets stuck. Okay. So making this read that based on those levels and yada, 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 doesn't make any sense and doesn't help you. What you can do is you can come in and you can say we're in a liquidity hole, or we're just in a period where the market is just kind of doing its thing. There are market makers just letting it range across an area. But maybe there's somebody that wants to buy. So this is the other issue with auction theories. They think, well, it keeps going until nobody's willing to buy it more at that price. No, that's not what happens. So what happens is, one or a group of people want to buy it, and they will keep buying it until they have the number of contracts that they want. So in order to predict how far it's going to go has nothing to do with value or like the price at which nobody else is willing to buy. No, it's just the number of contracts that those institutions need to pick up. Right? And if you can calculate or estimate how many contracts they're going to trade in a particular situation, then you can guess how far it's going to go. Okay. So that's where auction market theory has some issues and how we fix and deal with that. So again, the question I would always ask myself for any of these strategies is, why is that going to work? Because the thing is once you have like a why set down, then you can go about trying to prove if that why is actually true, right? So you have this idea that the point of control is a value area that represents a fair, like an agreed upon value price. Can you prove that? Right? Now that we have the why of why we think it's going to work, when you actually prove that that's true. And in auction theory, we can't. Right? Because what is fair value? How do you calculate what fair value is? There's no such... Yeah. The only thing that works is if I buy or sell here, are more orders in my favor coming right behind me? Yes. Well, in day trading, essentially, yes. Profitable trading is, in one form or another, even if you don't realize it, making successful predictions about future orders. Because the order flow is, like That's the market matching algorithm. So you pass the same set of orders in. So if you came in and all you did was look at price, and you say, here's the current price, and then you pass it into a function, you can't, it's not a, you know, one-to-one relationship. I pass this number in and I always get this number out in the next minute. It doesn't work that way, right? But with order flow, it does. Order flow, you pass in the same set of orders, you'll always get the same result out. Figure what do we call that? There's nothing about like the state of the market or anything like that that will change the answer. It's just the orders that you pass in. It's all the information, right? So if you look at it from that perspective and then you just say, well, okay, so I have to be able to predict the orders that are going to be passed in. Now that's hard, right? But my edge is a crystal ball. Really what you want to do is just know what's going to happen, right? Like, think about that. So if I know that they're going to buy this thing up, then what I can do is I can buy it before them. And because I know that they're going to buy it, then as they buy it, price will move up, and then I can take profit just before they're done. That's really what you're trying to do. Day trading, at least. Well, I think that my little oh, did I close it? No, I didn't. It's right here. I am not convinced. It's saying look at every window and just assume that it's a chart. I don't think that's what it actually is. So what we can do is we can pause it, you know, like we can do debugging and like just stop the debugger right there and then see what the actual type of it is and see if it's actually is a chart. That ChatGPT seems to think that it's a chart, but I don't think it actually is. It's probably more like a chart control. Yeah. Maybe I'll test that later, but I don't want to mess with it right now. Yeah, it's like you either have information early that will tell you the order flow, or the information is so big that you just buy or sell with the info as it comes out, and there's still confidence that there's more orders coming in your favor. Yeah. Exactly. Just know what's going to happen. Let's see here. Citadel's Rubner says, we absorbed the brunt of the storm and calls for a start of the year-end rally. Yes. He might be right. They might be right, honestly. Except for that there's still a Federal Reserve meeting to deal with. So we needed lower interest rates. Were the cuts that we got enough? That's the question, really. Right? And market is delayed, so, you know, hard to see what the effect of the rate cuts that we already did are to be, you know, just straight from there. And then, you know, we haven't been getting data. So this is an even bigger problem. So I don't know. Maybe the Federal, well, I mean, the probabilities now are that the Federal Reserve will not cut in December. I kind of feel like that you should cut just to be on the safe side. Like if we are really close to neutral or something like that, I really don't think that one cut is going to create hyperinflation or anything like that. So I think that you still do the cut, and then you can say, let's wait and see what the data says. Yes. I don't think that they're going to do that. I think they're not going to cut. And we better hope that the economy is a lot better than we think it is. I am seeing some evidence that like things are improving. Like I do have some reason to think that there's a lot of people that don't hire, you know, during the holidays, but I have reason to think that some tech companies will be picking people up in the January time period, and it'll be better. Okay, let's see here. I'm not even going to bother trying to pronounce your name here. So what the knowledge that you should have so you can predict if some asset will be bought so you can leap in the flow. Ah, okay. Asking the right questions now. Oh no, that's not what we wanted. Green logs. Okay. Is that doing the right date today? Yeah, it is. That's the 24th. Okay, cool. All right. Okay, so let's come over here. So the first, so let's split this out. Seasonality, CTAs, news, or let's say economic releases, the Fed speakers, okay. So first, let's come over to forexfactory.com and see what do we have on the docket today. Nothing, right? None. None. Okay, CTAs we know from last week. Probably still selling below what was it, 67.25, right? $25. Oh, let's also put in here options. Gamma unclench today. Seasonality. Okay. Then on this we have to say day of week, time of month, time of year. Okay, so day of week it's Monday. Monday, so flows tend to be lighter. Time of month, I can spell month. Month. It is last trading week and around Treasuries rollover. Okay. So that gives you like there's going to be rollover volume, but not necessarily like an imbalance or anything like that. Right? Time of year. Week of major holiday may reduce flows. Okay. Geopolitics, job owning from the Japanese yen. Okay, we should also note up in here, holiday in Japan. Okay. So what I got here is, especially for the treasuries, because it's a holiday in Japan and it's a Monday and it's before Thanksgiving holiday and we don't have any news or anything like that, I expect the flows to be really light. And what do we got? Well, like, I mean, it's done a decent range, I suppose. Like there's some money available there, but it's just kind of back and forth in a range. It's not really doing anything meaningful, right? Now on the S&P 500, I think you might be able to make the case that because of the gamma unclench, that there could be some buying coming through here. But so far, I would say it hasn't really gone. So the flows that we got today, with the info that we got today, I say no trade. I say that we do not have the really information. What we would like to have is something that says, well, because of these end of month flows and this particular news and all of these things combined together, we have something that suggests that there's going to be strong buying today and we can front run that, right? That's why I don't necessarily take a trade every day, right? Today, especially on Mondays, I tend not to trade simply because it's Monday. But that's a bunch of different things that we have. And I wouldn't even say that that's necessarily everything that we have, but it's just like you come in every day and you list that out. And those are things that can meaningfully predict flows. Seth likes to use options, market maker, and positioning info, but there's also news squawk and just plain experience watching how the market reacts to headlines. Well, yeah, we definitely have the news squawk up, although I haven't really heard much from them today. Oh, actually, I don't have it turned on. And like the market maker positioning, well, like look how close they are. It's unusual for them to be that close. But that, I think, kind of suggests that the dead market today. Let's see here. User PC6ES8PC2P. Good morning, Seth. Good morning. Oh, man, I wish I knew who that was because they have a blue name, so it's somebody that we know. But YouTube changed the way the names show. So who is it? No, did I write this? Right. I don't always come in and take notes like this every day, but that's kind of the process that we use. Person is saying to cancel Thanksgiving and Christmas and do no shopping So we need to stand together and make a difference. Okay. Is that like stand against Trump? Or why? Well, whatever. Think liquidity is going to dry up as Thanksgiving approaches? Well, I'm curious to see how it plays out in this particular instance. I can remember in the recent past there being really big moves the week of Thanksgiving. Like, I think the Wednesday before in particular has had big moves before. So I think we got to keep an eye on that. But because of this situation that the market is in, could be different, right? Like, I think that you're either going to get like a slow melt up, or like on Wednesday, they're just going to absolutely sell the crap out of it again. So you have to go back. That's kind of interesting, because what has been causing the selling in the S&P 500? Well, I think that it is primarily a reaction to the AI trade, that it's up so much that we're kind of rethinking some of the valuations. And funny enough, it does seem like that this was very much triggered by Michael Burry being, with some of the information about his fund coming out that he was short. And so other people tried to short. And it's kind of, and I'm probably going to like regret talking about this, because it's like such a nuanced thing. People can say, you said this or you said this, but then, but look at the very specifics of what I said. It's very specific. I think that Michael Burry is right for the wrong reasons and to the wrong degree. So AI is overvalued, in my opinion. Not that there's any kind of agreed measure of value, but I think that AI is overvalued. But the kind of things that the analysis that Burry is using to say that it is overvalued, there are many things in there that are just wrong. Like, he says that they're depreciating the assets over 8 years instead of the traditional 5, but they are using those servers for 8 years. So the depreciation is correct. Things like that, where, his whole reasoning for it is wrong. But ultimately, there's two big problems. One is that AI is not giving the improvements in productivity that was claimed. Not yet, at least. And there appears to be some fundamental issues with it that kind of limit the technology, right? So it's probably the biggest deal in the computer science world in my lifetime. Probably the biggest deal. But artificial general intelligence, I don't think so, right? And then the other issue is that the amount of investment that is required for OpenAI, just OpenAI, to meet its commitments, the amount of compute and business and so forth that they've committed to people, is more than basically you can fundraise. There's just no way that they're going to be able to get that much money. And so that alone, you have to reassess what OpenAI is actually worth, for instance, right? So that's where I say AI needs to take a haircut. Now, it's already taken a haircut, so maybe that has already happened. Like, who am I to say? Kind of have to, the best I can do here is just kind of look at the sentiment, which I don't know if we get a good read on the sentiment today. Maybe after Thanksgiving. Everybody goes and talks to each other on Thanksgiving, and they all decide that AI is a bubble, and then they come back on next week and start selling. Right? Yeah. So anyways, the issue there ends up being, though, like, how much of a haircut is actually going to take. So that's what I was saying, maybe to the wrong degree. Like I've been looking at this beginning and I was saying, you know, this could like retrace 50%. But at the moment, I don't really feel like that's really very realistic. In fact, I'm kind of wondering if even a 10-20% retracement is too much. And what we've had already is enough. Now, I don't think that we'll necessarily just rocket back up to the highs. I think that it'll probably be a little bit more of a sideways market. But let's see. You know? So that's what kind of puts us in a difficult situation trying to predict what this market's going to do. At least from the equities perspective. From the Treasuries perspective, I think that the Treasuries are probably going to stay where they are until the Fed meeting and the next slew of data. Is ES finally breaking? Well, it's not. It looks pretty okay at the moment. You mean breaking up? 66.89. I mean, I have some hopes for today being a positive day. Like, you got the gamma clench thing going on. But I'm kind of wondering if, because we were in positive gamma territory and everything, negative gamma territory, right? That was like leading to all of that volatility last week. And so ergo, the unclenching in this case is the opposite. It will be a reduction in volatility and probably slightly positive. I don't think that that's enough for me to just take a trade in ES. Because the amount of flow, like the amount that it would move up based off of that. But yeah, I think that if I had taken a trade through this, it would have tried to be getting long. I guess for a day trade for me, I kind of need something more than that. I need something that makes me think that those orders are going to come now, right? Man, what's this? r/botcoin. I think Sailor will go down as one of the greats. One of the greatest scammers. Yes, right along with Charles Barnesy, Bernie Madoff, the guy that tried to sell the Brooklyn Bridge, and the guy that invented snake oil. The business model is a complete scam centered around buying Bitcoin, hoping the price goes up, and selling company stocks so they can buy more Bitcoin. I think this will be known as the Sailor scheme, and he's going to go down into history, not in a good way. I sure hope so. I sure hope so. Yeah, and it already happened once before, yes. People don't learn. Look at Adam Newman of WeWork. People are throwing billions at him again for his vaporwave concepts, even with his proven lack of business success. But that's the whole thing, is that the biggest advantage is the ability to raise capital. Like, straight up, if you have the ability to raise capital, solves so many problems. And having had a lot of capital in the past, or managed a lot of capital in the past, gives you those relationships and makes it easier to raise. It's really the biggest issue in the way that we allocate capital in the current system. There needs to be some, we need to figure out some kind of counter mechanism to make it harder for people that have already raised a ton of money to raise more, and easier for people that have never done it before to raise money. Like, I don't know, let's start with like a really distortionary government program that probably ends up in a disaster, but like we can do it and see what happens, right? Like we can make a rule. If you've never raised money before for a business, The government will automatically give you $1 million to put into your business. That would encourage like literally everybody to go and start their own $1 million business, right? Yeah. Huh? Okay, and then see what happens. See, right? Then we can make some rules to be like, okay, but we'll still do that, but maybe we won't give you $1 million, and you have to have this business plan first, and there'd be some rules. Because the whole thing is we want to allocate money efficiently, allocate money to things that are going to grow the economy, but then also provide more opportunities to people that have never had the opportunity before. So we got to figure out the sorts of things that are like, all of the people that have never raised capital before, what are the things that are most predictive of the ones that end up being successful with it? And or can we add education and other resources to help ensure more of them succeed? I think it's hard to raise money largely due to the economy is so saddled with debt at all levels that capital is going to debt service and not available for business expansion. Well, I don't know if that's actually necessarily the case, Rox, just because like the overall debt burden is not that high right now. But what is happening is that the interest rate that you get on borrowing is so high that a very large portion of business types don't really make sense. For sure. Right? And I think you can really see that in the whole tech world, right? Like, because especially these guys like Apple and Google, they have been so cash rich for so long. Like it's really quite insane. And the amount of money that they put into stock buybacks and everything is really quite insane. But they're ratcheting down. Why? Well, interest rates are higher. And so that limits how much money they can actually borrow right now. And then they're still borrowing money. But what are they going to do with that? They're going to use most of it for the thing that they think is going to give them the best return right now, which is AI. And so what's happening is that the investment in AI is crowding out all of the investment in everything else, most particularly investment in talent and people. And that's where you get the economy that we have today, right? What about the debt at the government level? Well, that is a problem with the government budget. But at the moment, that's all theoretical. I don't think that the amount of the government borrowing is necessarily having a major effect, at least not in the US. Now in Japan, right, if you want to see where that road goes, then just look at what's happening in Japan right now. Or the UK. You realize that your economy is falling apart and you need to invest more in order for your economy to stay afloat. And you already have too much debt that any kind of extra debt that you take out just hurts things. We run a very high risk of doing that now in the United States. But for now, it's just theoretical. But it is affecting companies. And not because there are some companies that are settled with that. There's like zombie companies out there, but they've been zombie companies for a long time, right? So should note that at 6,700, there appears to be a number of significant volatility levels. So there might be a little bit of resistance come in here. Only got like what, 20 minutes left? Okay, yeah, 20 minutes is fine. This person on Reddit says, just remember that socialists argue with emotion and not intelligence. So when debating one, skip over their guilt tripping and use logic. I wish it was that simple, but I don't think it's that simple. Because one, if they are more arguing from emotion, then skipping over that and using logic is not going to convince them. And two, socialists are extremely academic. This is something that I've kind of been reading about over the weekend. Like, there's this guy on TikTok talking about what did people in the United States think when the French Revolution happened. And many of them were concerned that the French Revolution was very secular and that they were moving away from God, and so they didn't like it because of that. That George Washington in particular was talking in that direction. And so there's always kind of been in revolutions this kind of like secular, get rid of religion kind of sentiment at its heart, right? And that's definitely the case with communism, where, like in China, they basically ban religions in China, right? Well, communists have this idea that, like, well, if we get rid of religion and everybody, studies and becomes an academic, then they'll come around to our way of seeing things. That's what communists believe. And that's why they target educational institutions for their propaganda, essentially. And they have a lot of books and stuff you can read that talk about the labor theory of value and all of their way of thinking things. And they even have data and everything. So it all, if you're the type of person that's like, well, if I read a study and it's peer reviewed and everything, then that must be correct or whatever. Like, you fall into that very well. Socialism looks very, very appealing. But the problem is that they're only giving you part of the story, right? They have this whole conception that there's a labor theory of value and how much of it is going to the worker and how much of it is going to the capital provider, right? But the thing that they're not seeing is how do you calculate the value of things? How do you determine what is a good price for something? And not only that, but you have to calculate the price for every single good in an economy, the millions of goods in the economy. How do you calculate that? It's called the economic calculation problem. And in capitalist society, we determine that based on supply and demand in the market. So we create a market, and then the people that need to buy and sell come to that market and they sort the price out that way. If you don't have private ownership of capital, then you can't have a market, and there's no way to calculate those prices. So how do you figure out what the prices should be? You can't. You literally cannot get the information to calculate it. It's impossible. That's why you have to have a market. Right? And this is why communism doesn't work. All of their, academics completely neglect to address this one fundamental issue. So you might be able to convince them that that the real problem is the economic calculation problem. That's kind of my thinking right now, but I don't, probably not. Probably you can't convince them. So what can you actually do? I tell you what you can actually do. Do well. Do well. What is the common phrase that like success is the best revenge? Right? There will always be people that will be lured by the appeal of communism, because that is kind of the natural, like it's kind of built into our instincts. Like especially at the family level, you share everything, right? And then the same thing with like equality, like the idea that one person shouldn't be given way more than another person or something like that, right? These are all like natural tendencies as people. But once you realize that because of complexity and then the scale of an economy and everything, that those natural instincts just don't scale. And if you push through and ignore those kind of fallacies, you have a more successful society. And that's how it's, that's why we continue. I think that communism and socialism will always struggle to gain a hold in the world, simply because they will never be as successful as the economies that understand these things and practice them. Now, that doesn't mean that there's not issues here in the United States, right? There's definitely some issues with our system, but it's not in the wall. Like this whole idea that we need to, like everybody needs to be a certain amount of equality, that's not a problem. Okay, like the amount of income inequality in the society doesn't matter. What matters is what is the standard of living for the poorest people. That's what really matters. And the idea that you shouldn't have private ownership of capital. Well, it doesn't work that way. So if you have, where was I going? I kind of lost my train of thought there. I'm sorry. As long as you have private ownership of capital and markets, right, you're going to be relatively successful. And then there's all of these other things that you can change, right? And I don't think that it's necessarily like income inequality, but it is like, I think that the level that the base people are at is a problem. And I think that like when you look at middle class people, their access to capital and their ability to be like entrepreneurs, we need to change something there, right? So there's changes that we can make, but it's still within the confines of having private ownership of capital and having a free market. Yeah, family is sort of communist, but it doesn't scale. We in the Mormon religion had its own bit of experimentation with socialism, and it didn't work. And we would always joke when we were missionaries that we were living the law, whatever, like, you're two missionaries and you each get a stipend, but we would always share it so that we'd have more food, more. The law of consecration, that's right. Yeah, we'd always say that we were living the law of consecration. But it doesn't scale. It doesn't scale to a whole community. No, sir. And definitely not to a society. But that's the other issue is how do you convince people that they are not capable of dealing with complexity on their own? Can we say it that way? Basically, like when you have a complex system, to predict what it's going to do, you really have to do some modeling. This is called what is this called? It's called irreducibility. Basically, if you have a system, can you come in and say, okay, Well, like the three-body problem. I kind of think that the three-body problem is an irreducible problem. That I can go through each step where those planets are, right? But can I make an equation to predict where the planet is going to be? Well, we haven't found one. I don't think that you will. It's irreducible. So the only way, that doesn't mean that you can't predict where the planet is going to be, but you have to run through all the steps. You just have to run the simulation, essentially. There's no shortcut, right? And that's most complex things, right? So we as humans, this is a place where we are simply not capable of doing that. You need a computer to do it. But that won't stop everybody from trying, right? And kind of funny enough, what happens is that these self-organizing systems just kind of sort themselves out, given enough time. But part of the way that they will sort those sorts of things out is like, the poor people aren't, in the middle class aren't doing well enough right now, and they're gonna make their voices heard and change some things. And there might be some, some trouble while that's happening. Maybe we could avoid it. Oh well, probably not. Probably not. What's gonna happen's gonna happen. Doesn't scale because the human mind doesn't scale. Will AI scale in that way? We can take like 1 million AIs and have them play out a simulation. Hey, now you got something, right? And the solution that they might come up with, by the way, might like make zero sense to us. That's, I think, the funniest thing, right? It's like, really, if you took a bunch of kids, okay, well, what is this book called? Lord of the Flies, right? You have a Lord of the Flies situation where it's just kids and they don't know anything about society. And so what do they naturally do as they form their own society? I don't think that it would be capitalist. Capitalism is actually an unintuitive system that resulted from self-organization among independent actors and not from people thinking it through and figuring it out. We only figured it out after the fact. After it existed. Understand why it's effective. Because you have to have a market to calculate things. All right, guys. Well, I'm just yapping, but Treasuries, man, they have been stuck here at the bottom of this range here at like 07.5, 08 for a whole hour. That's terrible. Told you, though. Japan's not here today. All right. Well, and the S&P is they did get through that line, but it's already starting to turn. So we are getting that resistance a little bit, I think, that we were expecting here. It looks like it's actually some market orders selling as well. So we'll see how successful those market sells are. You know, could this turn into like another doomer of a day? Because it's always been like after I've left that it starts doing the interesting stuff in ES, right? So you might have some fun over there. But I got some other things to do today. I will talk to you guys later. In the meantime, stay excellent.